There it is. All right. All right, cool. Get that up. Let's make sure this is up and live. Okie dokie. One last thing. Okay, and we are live. Okay, cool. Good morning, everyone. Good morning. It's Tuesday, Wednesday, April 29th, 2026. New day, fresh start. Welcome to the Pitbull Traders Morning Game Plan. I'm your host, Manny. The purpose of this show is simple: live futures trading, real-time technical analysis, and actionable trade setups, all with the focus on trader education and driving the mindset designed to create consistent profitability. Every morning we'll come in with one goal, guys and gals: build out the structure before the open so we're operating in alignment with the dominant forces of the day. We're not guessing, we're not tracing, we're making trades that follow a specific logic chain. And if we lose on those, that's fine, but those are high probability setups. All right, so let's map it out. Really quick to review yesterday, we pointed out that we wanted to see price get back into the Friday's range. And thus far, just after the open, price traded higher, looked inside the prior day's range and failed. All right. And that's important to note here, because what ended up happening was the entire day's range was outside of Friday's range. And the reason why that's important was, so if you look on the higher time frame chart on the left, we were in a balance from April 17th for just about a week. Okay. And then on Friday, we broke out. Sorry. On Monday, we broke out. So this was the breakout right up here. And that breakout thus far has failed. And then what resulted happening was, over the course of the day, we traded lower, we tested the lower extreme, and we tested that, we highlighted that the balance area, that weak balance area, had a volume point of control in the 7140 to 7145 range. And we tested right down into that and were rejected. But thus far, the ruling reason has to be here that we're still, that breakout looked above the balance area, was rejected, and now we're back into last week's balance area. So real quick, you know what I want to do is, let's take a quick look at the weekly chart. Every once in a while, a few times a week, I like to look at the weekly chart to see what's developing and to kind of get an idea for how the rest of the week might materialize. So I typically look at it at the end of Monday, Wednesday, and then Friday morning. And thus far, you can see that that's pretty clear to see here, that we looked above last week's high. Last week's high was 7,200. We looked above. We went up as high in Globex at 7,223. And now we're back into last week's range, testing the midpoint. All right. That covers the higher time frame analysis. Well, for now. Make sure this is clear on your chart. Okay. So the key level there that we want to focus in on is that 7150 to 7140 to 7150 range. I know it's a broad band, but those broad bands, they're it's you can play them a lot of different ways, but typically for me, if we're in a support band of 7140, 7150, I don't want to start initiating any short trades down there or being aggressive towards the lower portion of that band, right? It just doesn't make sense. So let's be mindful of that. Let's carry that over in our narrative. Also, I think what makes sense to draw out here is let's just take a simple little trend line and connect the highs. Let's monitor that today. All right, cool. All right, so what do we have thus far? Let's figure out what our plan of attack is going to be today. Map out the structure going into the open. All right, so drilling down, getting a little bit more granular and focusing in on the 15-minute chart. We already know that 7140 to 7150 is a broader band, but more specifically 7145 to 7150. We could see that yesterday we tested down. We traded as low as 7146 and we bounced. Just now in the early Globex session, or not early session, but around 8:30 this morning, we tested down to 7161 quarter. And that was pretty much the top of yesterday's lower balance. So yesterday we opened, we traded lower, and then we had this balance area. And you can see how many times bears were trying to push price lower, and they just kept running into this wall at 7150. Okay. Every test down there was rejected. There were multiple failed auctions down there. And then what happened, right? As soon as we got above this pivot high at 7160, it was a short squeeze. Everyone that was looking lower, expecting lower prices, got clapped. They got their pockets picked, ran for the exits, boom, and we traded higher, right? We know how this works. See it over and over and over again. All right, so now what happened in the overnight session, and does that give us an edge going into the open? So thus far in the overnight session, we looked above yesterday's high at 7183, and we were unable to gain any traction. We traded as high as 7188.50 and got rejected. Now we're back into yesterday's range. So let's map out the bullish argument. So assuming we open right here where we're trading right now, 71, let's call it 71.71. Do we get an open drive higher, right? Right off the open, do we get a strong push higher? And the first thing we want to monitor is the value area high level at 71.76. You can see that right here on the chart. Okay. Make sure that that's coming out. I'm not sure why that's not showing on your chart. Hang tight. Okay, there it is. Wait, is that showing or not? Oh, I think I know why. All right, hang tight. I'm going to have to, the, my markers won't show unless I have to kill this share and start it over again. All right, hang tight. There it is. All right, boom. There you got it. All right, so let's get back to the bullish argument. Let's get on track here. We're running a little bit late. Also, just a quick programming note. Today, we're going to be joined by David Dubay from PTG, Polaris Trading Group. Always fun to have David on the show. He comes on every Wednesday, shares his insights. And for those of you watching, often when I'm trading, the algorithm that I trade on screen, they were designed by David. High probability setups that follow the methodology. If you're interested in that, go to PolarisTradingGroup.com. You can get more information there. All right, let's map out the bullish argument. All right, so say we open at 71.71 and we get that open drive higher look, right? So the first thing we're going to have to contend with is this pivot high here at 71. I believe it looks like 71.81. 70, yeah, correct. 71.81. Okay, so if we're truly bullish and it's, you know, we're going to break out of last week's balance and we're going to go to new all-time highs. If it's really bullish, then that drive higher, we'll be able to tell it right away, and it should drive us right through that level and test yesterday's high. Okay, if we break out to yesterday's high, that's going to give us a great opportunity to gauge the price action and to assert, do we want to get long on a pullback to 71.80, 71.81 for a target of the overnight high and potentially higher? Okay, so I think that that's a pretty safe assumption there. If we get above yesterday's high, we get a pullback that doesn't gain any traction, kind of fails, then at that point we would want to be looking for long trades. All right, so we know this being ES, and we know how ES loves to trap, right? And we cover this every day. We don't only cover, you know, the bullish argument or the bearish argument. We also want to discuss, hey, where can we get trapped, right? We don't want to get trapped. We want to keep everybody that's watching on the safe side. Make sure that when you're in alignment with the dominant forces of the day, you have to be alert for traps, right? Because that's just the nature of ES, right? And the nature of liquidity. In order for ES to move, it needs liquidity. In order for it to find liquidity, it has to trap traders. So let's discuss that, right? All right, so let's say we open. Oh, now we're suddenly 5 points lower, but no worries. Say we open, we drive higher, we look above yesterday's high, fail to touch the overnight high or even get above it. But then immediately, much like yesterday, we get rejected from yesterday's high. Or price action stalls. So do we get a price action stall that gets us back into the overnight range and back into yesterday's range? At that point, we can assert that that's a look above and fail. And what we should start doing is looking for pops to fade to get us back, for scalps to get us back lower, down towards the settlement, down towards prior day's value area. All right, so there's two ways that can manifest. It can manifest above yesterday's high, 71.83, or it can manifest from above the overnight high, 71.88. Okay, so the look on, if we fail above yesterday's high, would be something like this, and we would monitor for any pullback, and we would look for yesterday's high to act as resistance. And we can then enter short trades to scalp it down to get back down to the settlement, right? So here we have two trap ideas. Either we trap, if they decide to trap above yesterday's high or above the overnight high, we know what to look for, right? It happened yesterday. We called it out. We were looking for price to gain acceptance back into yesterday's range. And I believe the level there was 71.77. And just as we called it on the trap trade, that's exactly what happened. It failed to gain any traction. There was a failed auction at the high. We called it out. And then all of a sudden, price was trading back within the overnight range, and we scalped it short. All right. So let's be mindful of that. 71.83 is yesterday's high. 71.8850 is the overnight high. So we have the most bullish argument, right, where we get an open drive higher. We'll monitor any pullback to 71.80 that holds, that stalls out, and it should go really fast. At that point, we can get long above yesterday's high with our backs or our risk marker being that 71.80 level. And then we could look for long ideas with scales and targeting the overnight high first and then potentially higher. All right. So that covers the bullish argument. Let me just get a quick snapshot of that for the review later on. Hang tight. All right, so those are the three potential bullish arguments. Let's move over to the bearish argument. All right. So the narrative, the ruling reason being here that we looked above yesterday's on the higher time frame. We discussed it earlier, right? We looked above last week's. We broke out of last week's range on Monday, failed to gain any traction. Buyers were uninterested, and that was sold, and we started to trade lower. Okay, so here we in the Globex session, you can see that we're moving back down lower. Let me remove this alert here. I have an alert set for one of my setups, but you guys don't need to be bothered with that. Just as a FYI, 71.58, 71.62 is a support area. All right, let's move down to the bearish argument. All right, so we're opening up 71.66. And say we get that flush, right? Price just flushes straight down. We'll know it when we see it because ES loves when it's selling and it's really selling. It's elevator down, right? It's taking no prisoners. It's moving through. It's a hot knife through butter. Supports don't hold. I mean, multiple supports don't hold. So let's say we get that open today, right? So say we get below, we'll know it. If we get below the overnight low at 71.61 quarter, or even yesterday's value area low at 71.55. All right. If we get that move lower, right, then at that point, we can start looking for retracements to enter short trades that would ultimately target yesterday's low down at 71.46 quarter. Now, remember, we could look there are multiple traps that can happen down here, and we'll discuss those in a minute. But that's the most bearish outcome, where we get an open drive lower. We fail to gain any support at the overnight low or even at value area low at 71.55. At that point, we're trying to enter a short trade. Well, we will enter a short trade with our backs or our risk marker being that overnight low pivot at 71.61 quarter, which might change here shortly. But we're going to use that number for now. And then at that point, we would be targeting much lower, yesterday's low at 71.46 quarter. I think that makes sense. But you know how ES is, right? Loves to clap, loves to trap people. So let's discuss the trap. All right. So say we open 71. Jesus, every time I call out where we're opening, we're like 3 or 4 points lower. All right. We're opening 71.63. Say we breach whatever, currently the overnight low is 71.61 quarter. So say we open, we breach the overnight low, hit value area low, and then price starts to peter out where it maybe goes a little bit lower, but it loses all momentum and just kind of stalls. At that point, we're going to probably see what we saw yesterday, right? People are going to sell it, trying to push it lower, not getting anything for it. And we want to trade that trap, right? So say we get that secondary push lower that fails to gain a following. And then what we'll start doing is looking for price to retrace back into yesterday's range, back into yesterday's value area. And at that point, we'll gauge the strength of the momentum of the move. But more importantly, what we're going to be looking for, maybe we get that inverted head and shoulders look, right? Where this is, hang on, this is a terrible drawing. Let me just fix that. Okay. All right. So we get the move lower. We breach value area low, fail to gain a following. Maybe they get one more push lower. We come back up. Now we're back into value area. People are still shorting it. People are shorting at the overnight high, but we know how much ES likes to trap. And then we put in a higher low. At that point, we're going to have a trend line break right around here. And that's the entry point that we will be monitoring. That's the point we will be monitoring for an entry on a long trade that gets us back into the value area. So remember that if we get any lower highs here, monitor, just put a simple little trend line on it. And that's more of, with those short-term trend lines, it's better to trade the traps as opposed to buying them as support or selling them as resistance, right? Use them to kind of guide your structure or what you're looking at on the day and trade the traps, right? Because we know that trend lines on smaller time frames are less likely to hold on the second and third touch. All right, so do we get a trap trade where we go below value area low, fail to gain a following, and then get back into value area? At that point, we'll start looking for higher low, and then ultimately look for a trend line break or a higher high relative to the local low, the local high we just put in. You can see that here in the center. At that point, we'll look for long trades that get us back into the overnight range, back into value area, and ultimately for a tag of yesterday's settlement and a gap fill. All right. That same thought process applies to yesterday's low. Okay, so let me get a screenshot of this and then we'll cover yesterday's low, the trap trade at yesterday's low. Okay. Sorry, I'm running a little bit late here, guys. It's just I had some tech issues at the open. I should have this wrapped up by the time the opening bell rings. I'm getting better at it though. All right, we get to move lower. We get below yesterday's low? At that point, right, we can start gauging for the strength and the momentum of the move. Let it bounce first. If we're looking for short, we'll look for a bounce first, and then does that bounce fail to gain any meaningful upside? At that point, what we start looking for is a breakdown short below the local low pivot, right? So say we, let me get this little marker here. So that look would be trade lower down here. It bounces. It's a mediocre bounce. Immediately we start testing lower. What we could do there is try to get a breakdown short below this low and, have a static risk on it because you might be too far away from yesterday's low. That's the most bearish argument. Again, we have to apply the trap method, the trap thinking, right? The dominant forces that trade ES love to trap. They love to grab liquidity. So do they come below yesterday's low, grab liquidity, and then fail? Price just stalls out, and then we immediately start moving higher, reclaim yesterday's low. At that point, we'll start doing the same kind of thinking, sit patient, monitor the price action, and look for a higher low that gets us back into yesterday's range. And we can use that as that local low as our risk marker for long trades that will ultimately target the overnight low and maybe even a gap fill up to the settlement at 71.71. All right. So that covers the bullish argument, the bearish argument. We also covered 4 potential trap trades that may manifest. And it's important to pay attention to those because, guys, I'm going back and I'm reviewing these streams. And last week, the trap trades were, I think, 3 of them that I highlighted materialized. And yesterday's, if you guys are watching, it materialized also above 71.79, where we just looked as high as 71.83 and then filled right back into range. All right. So that covers that. Let's make sure that we monitor the opening print here. Let me get that on my chart. And then we will, this is already moving pretty low. Let's see, with the opening print, 71.63 quarter. We are way below that. And let me just look at the order flow here, guys, because we opened 71.63 quarter. That looks like it failed. So we made a high 71.65. Guys, that was a failure up there, right? I can see it in the order flow. We had delta divergence, very few contracts traded on the offer, and they just pounded 71.64.75, which is one tick below that. I mean, they pounded those pretty hard, guys, down to from 71.64.75 down to 71.62.50. I mean, they were just waiting to sell. They trapped all those longs. All those longs got clapped. All right. So now we have David joining us. Welcome to the show, David. Please introduce yourself to the folks watching on YouTube and on socials.
Yeah, good morning, Manny and crew. PTG David here. Glad to join up with Manny here on Wednesday. Fed Day. I'm sure he's gone over that already. So you should see my charts as well. And yeah, so I mean, from our perspective, the early lean obviously is favoring to the downside a little bit. But we're going to be open and flexible to any and every opportunity that the market offers us today. It is a cycle day one for us. If you're following the Taylor 3-day cycle parameters, and as you can see here, price is still within the prior range yesterday. So if we get an extension down, we'll be looking for a play down near towards the 35s, 25s area for a potential kind of a look below fail reversal. We call that a PKB or peekaboo, right? Whatever term you want to use, that's kind of what we look for. So if it comes down there, obviously a test of the prior lows will also, a scenario. And if we get some sort of reversal off of these areas, we'll be then shifting gears. And what we'll see there, if that is to occur on our execution charts here, we'll start seeing, all these moving averages start kind of shifting back upwards here, which will then give us some clues as to the potential for continuation back to the upside. But for now, we're just somewhat neutral to begin our session on our side here in the PTG room, and we'll take it from there. So,
cool. Thanks, David.
Manny, is Danny supposed to be coming on board a little bit later on to talk about the Fed Day preview, or what's the schedule for this morning?
Yeah, good. Thanks for mentioning that. So, all right. So really quickly, guys, we just tested below value area low at 71.55.50. Let's monitor that. This is one of the levels where we said that price could trap. So stay alert right here. And so heads up, guys. So we're doing a live giveaway today at noon. So look out for that. If you go to the Pitbull Traders YouTube page, you'll see it scheduled for today at 12 noon. We've got a ton of speakers coming on. So me, David will be there. Mr. Top Step, Danny Riley himself will be joining us. We also have Danny and Lauren who are going to chime in on their view on markets, the ags. Also, they're going to be discussing mindset tactics. I love what they bring to the table. Just great, knowledgeable traders, and they bring that kind of that female perspective to things that I think is awesome and super sobering. I love to have female traders on the team. I think it's really, really cool. And we also have Rev coming on to give us his insights on oil. And I know you guys know, I know you guys can see that oil is up almost 5% today with trading 104.65. So heads up there with a resistance at 105. We'll see if it can bust through. And I think that that's indicative of what we're seeing in the indexes, right? Uh, ES is selling pretty hard. Nasdaq is below yesterday's low. Yeah, so while the Russell and ES have not traded that low yet, Nasdaq is kind of leading the charge. Quick read on the internals: 1.4 to 1 negative on the NYSE, 1.29 to 1 negative on the Nasdaq. No read on the ticks yet there, but we'll keep an eye out for that. So David, you pointed out, you highlighted very astutely about today being Fed Day. And so I was thinking about that this morning. I was getting a workout in, and I was thinking about the Fed here, and also more importantly, how it relates to what we're seeing in bond yields. And bonds have been bid, guys. Bond yields are going up. So, I don't think the Fed's going to cut with bonds going higher. I mean, shit. If anything, they would probably. I think we need to look out for talk about potential Fed raises. As wild as that sounds, but I mean, that's the math. That's what we're seeing here. We'll see. But this could be quite a shock, guys.
Yeah, Jay Powell's final act, as I wrote today in our daily trade strategy. Oh, Mark, thank you. All right, excellent. Mark has good volume here today. Mark, I don't know what I did, but whatever I did, I guess it's good. In terms of Fed, I'm no expert in any of that stuff. It's beyond my pay grade. But it is Jay Powell's final act as Fed chair, and my sense is there's not going to be any. I guess the Fed funds CME tool prediction model says 0 or 100% chance of no change in rates. So, and I don't think he's going to rock the boat in any way. I think it's going to be his swan song, last final talk about perhaps what they've accomplished at the Fed, or maybe what they didn't accomplish at the Fed during his tenure. But he'll probably talk somewhat about that, and maybe from his view of what the Fed's direction will continue to be, at least until he's that he passes the baton over to this guy Warsh. So I don't think you're going to have a lot of fireworks. I think you'll have just a lot of rhetorical stuff going on. So I don't know. Could be wrong. I mean, like I said, it's above my pay grade.
No, but you know what? I'm glad you mentioned that, because that really makes sense, though, right? Like where I'm thinking of, I'm looking at the charts and I'm thinking, well, what if we get a raise? But when you add that narrative to it, and you kind of add that context to it, that that he's not going to want to rock the boat here on his way out the door. That really makes sense. So we'll see. I don't think that an outgoing Fed chair would intimate about higher rates, especially in this political environment, especially what's going on in current events. I think he would probably just say, hey, that's the next guy's job to do. And let me just, take a graceful exit here before I get myself in a situation I don't want to get into. He's probably looking at his next opportunity. So, yeah, it makes sense. So don't forget, guys, we have that. We're going to be live streaming at 12 noon. Sorry, is it 12 noon? Let me just make sure I get the time right here.
Yeah, 12 noon is when Lauren and Danny are scheduled to come on. So yeah, I would imagine 12 noon would be the kind of start time for all that.
Excellent. Yep, David's right. 12 noon. We have Danny and Lauren starting out. Again, we're going to have Mr. Tops Up himself, Danny Riley, always colorful, adding his breadth of knowledge and experience to the current environment. Let us know what he's thinking. If for those you don't know, Danny pens the write up every day, goes out to a massive amounts of industry experts. It's called the opening print, and you can check that out on mythotopstep.com. All right, so looks like we found a little bit of a balance area here. Let's just see. Yep. We could see some potential tests, maybe even up to the overnight low. We'll see what materializes here. The algorithm has me short here at 71.59. It's a no hands trade for me. And we're looking for their first target of 71.55. Boom, first target hit. Thank you very much. You know, it's pretty awesome when you start the day on the right foot. I thought I had a pretty decent long earlier off the news drop. Bought 71. I think I got 71.64, and then I added to it at 71.67. Ultimately got 5 and 10 point scales out of it before it stopped me out at break even. And for the folks watching at home, every morning in the Pitbull Traders chat, which the link is in the bio, we put out high probability setups in our chat room. We also put out the execution clock, which is a tool that we use to frame our trades around specific times. See, price is important, but time, that's your butt, right? So you can get into a trade, have the level right, and then not be able to hold it because it's just chopping around because you were just too early. I mean, how often doesn't that happen? All right. So look out for that. All right. Got my second target here at 71.52. Very nice for so I got a 5 point scale and a 7 point scale. So pretty happy about that. Pretty happy about that. Now stop moves to break even. And let's see if we can get the last remaining target. Let me make sure that I'm not running into a support area. Yeah, we're at that. We're at or below that support area now. And the next one is. Did I draft that one? I know it's yeah. So it was 71. So it was. Hang on, hang tight. I want to make sure I get this right for you guys. It's on yesterday's sheet. So okay, yep, we just traded it right now. We just hit that. Let's see. Okay, so hey, heads up. I had an alert set for crude at 105. Crude just traded 105, guys. So heads up there. It's going to be meaningful if we break through it. I have it as a significant resistance. Just take a look at that chart real quick. All right, let's dial into the lower time frames. Okay, so we hit 105, traded as high as 105.04, and thus far we're pulling back a little bit. So keep that on your radar. If crude hits that resistance and kind of fails to gain any traction above it, I would expect that perhaps we see a bounce in the indexes. But we'll see. Make sure I have this right. Okay. So heads up, I'm also going to make sure that you guys can hear our institutional trade tracker. So we have a tool that's called Spygate, and what it does is it tracks the institutional, when institutions are running buy or sell programs, we get alerted to what the program was, whether it was a buy or a sell, and how much was the program worth. So thus far, we had a few sell programs, nothing really that would get my attention. But at 9:45, we had a $129 million sell program. I listened to the alerts. So that knock would be a buy program. That sell would be a sell program. And for anybody watching that wants access to this tool, if you're a prop firm trader, go to pitbulltraders.com. There, when you buy an evaluation, we include this tool because, guys, we want to see you do well. We want to see you pass your evaluation. We want to see you. We want to lend you the tools that we use. And I'll be honest with you, if you use the Spygate, it can easily get your evaluation passed in one go if once you learn it and you learn how to use it right. So look out for that. Go to pitbulltraders.com. That's going to be included in your purchase of an evaluation. All right. So let's just take a look at how these lows traded. 71.49.50 is the low. Oh man, the pollen is so thick by where I live right now, and I get pretty bad allergies. My daughter gets them horribly, like she swells up and everything. But yeah, I was pretty stuffy this morning and yesterday. Couldn't stop sneezing when I woke up. All right, let's see what we have here. All right, we got a rejection there, and it looks like I'm about to get stopped out on the last piece here, which is fine. I got the two scales out of it. I'm happy about that. You know, you take what the market can give you, and you know, let's talk about something that's probably more important than any one trade or any one setup, right? Which is consistent profitability, right? Because if you're gonna make a career out of trading, like a lot of us have, you know, you start to learn over time that it's really not about your one setup or one entry. You're gonna have a ton of trades, right? You're gonna have hundreds of trades over the course of the year. So think about that, right? Is it more important to nail one trade and get you super euphoric about it, or is it more important to have a sound process? And I think the latter. You know, I've noticed that over time, you know, they become this folks tend to focus a lot on setups and one particular trade and so forth. And I'll be straightforward with you. You want consistency, right? The trader that can consistently make 5 points, $250 on one contract per day is going to beat the trader that can make, you know, I don't know, 5 times that on one setup. And so consistent profitability is not about catching the big move. It's about not losing your control on the bad days, right? Because if you can limit that loss of control on the bad days, then what ultimately happens is that one contract you're trading for 5 points, $250 of what happens when you size up build your account up, and now you're trading, instead of one contract, you're trading 5 contracts, right? So think about that. And building that out, it takes time, but it's really more about limiting those bad days. So that you ultimately get that $250 payout. That $250 day will, by compounding, you add contracts to it. Now you're making, you add up, you get to 5 contracts. Now you're making $1,250 a day, and so forth. Because really, in trading, you don't get paid for being right. I mean, that's the common thinking, but in reality, what you get paid for is managing your risk, and that's about keeping things in check on those bad days, making sure that you stay grounded, making sure that you stick to your process. And I'll be the first to admit it, it's not easy. It's tough. All right, looks like I got stopped out of that trade, and I'm about to take another shiner on the CCI crossover. Let's see. Yep. So we came. Hey guys, cruise back over 105. All right. So heads up. Let's monitor for a back test of the overnight low at 71.61 quarter. Remember, this is one of our scenarios we outlined in the pre-market prep, right? So we discussed how price could go below value area low, 71.55, trap, reclaim the level, which it does. That's what we're seeing now. The next step is, what we want to see is, does price demonstrate, a bullish look where we can get back above the overnight low? I would think that that's a first touch fade. And then what happens after that is really, it's going to be the truth. Okay. There it is, 71.61 quarter, just traded. Let's watch it here. $71.61 quarter traded, 18 contracts came off at the offer. But look, our delta is pretty strong up here. It looks like they're going to hit it and they're going to breach it. Yep. So I got stopped out on the premium sell down here, which sucks, but I'm not going to unravel over it. Whatever. Let's see if they gain any traction above the overnight low, right? We knew that there could be a trap below value area low, 71.55.50. Thus far, we went down there. We wicked at 9:45, and now we're reclaiming the overnight low. All right. So I am 2 for 3 on the day. I had an algo trade that went well for 5 and 7 points with a break even stop on the last, and then I had a stop out shiner on the CCI for -5. Then I also had the earlier trade at 71.63 up to 71.74. I got 2 scaled out of that, 5 and 10 points. As much as I say, hey, let's not. I highly recommend not looking at your P&L. You kind of figure this shit out in your own head. So as we were talking about consistent profitability, I think that's it's such a big deal after you've been doing this for a while. And if you know if you're having wild P&L swings, right? That's and depending on when you started trading, that's kind of normal. But understand this, right? Wild P&L swings are more about um, that's more about you changing behavior day to day than your system. And what our job is to develop a system, a process, and trade that process as consistently like a robot as best we can. And consistency comes from doing the same things every day. Same prep, same levels, same execution rules, right? My edge comes from solid analysis, price, high probability levels, plus timing, plus, the biggest one is discipline, right? Because that's the one, discipline is free. You don't have to pay for discipline, but you pay for not being disciplined. I think that I coach a couple of traders, and the common thing that the common issue that I see is, most traders don't have a strategy problem. They have like a self-control problem. And we all start off that way, right? Uh, the guys that I coach, I'm trying to shorten that learning curve for them, right? Let's develop good habits early on so we can avoid some of those lessons. And those lessons, you're gonna have to go through them. All right. Make no mistake. Um, but can we shorten them? Can we get you to profitability faster? And the things that we work on, that I work on with my guys, is about consistency, about process, and we have this certain structure that I've built out that works really well for that. Um, really fine tuned it, and guys are finding a lot of success. It's kind of hard not chasing the shiny object or the every price oscillation. Like I get it, but long term success is what we're after. And like I tell them, if you can't follow your plan on a 1K account, you definitely won't follow it on a 10K account. It's important to not try to make money every day. The important part is to stick to that process. All right, and you know what? I feel like I'm lecturing everyone, and I feel like I'm preaching. Everybody's probably like, Manny, STFU, where's the next trade? All right, so let's talk about that. All right, we traded up right to where? We traded right up to the open. Our open print was 71.63 quarter, and we're rejected. Now we're moving lower again. Okay. Let's see. So this is that no fly zone, guys. You got to be careful here, because are we reclaiming being back in yesterday's value, or was this that pullback that we thought about? I mean, if you want to try a short trade, you got to get in. You got to get in closest to your exit as possible. My exit right now would be above the overnight low, 71.61 quarter. So that turns out to be what, like a 5-point risk. I don't want to be right at the level. I want to be a couple points below that. So let's frame it out at like 7 points of risk. And then let's add structure to it, right? So looking at a 15-minute, it just looks like, so look, let's frame it out, right? On the 15-minute, are we going to, so we just got a down move, and we got the up move. Are we going to come right back down where if I initiated at 71.57.50, I can get to 71.52? I don't know. It might happen. I mean, every time I say something, price proves me wrong. Just bees like that. Hey, David, whenever you have a chance, maybe you can let the folks know what are your thoughts on consistent profitability, and then maybe talk a little bit about, what you guys are looking for on your next trade. Is David still with us? I think David stepped away. It's not going to work that way.
Oh no, Manny, I'm back with you here. I'm sorry. I didn't want to over talk you. Can you hear me now?
Yep.
Okay, I didn't want to over talk you. So I kept my mic off. We're just sitting and kind of holding tight in this range, at this stage. So what I was saying to our group over here while you were uh, talking, I was talking about if you're on the bullish side, if you're, kind of if you tend to lean bullish, right, in your own style, you're waiting for a more bullish shift in price action to take, to get involved. Um, so that would mean for us looking for this price action to kind of get a little bit more bullish, lean to the upside, perhaps clearing out through kind of the 60, use a different color here, clearing out through the above, I'm sorry here, hold on a second, trying to get my right, above 60 65s, right? So clearing above that level. And of course, we got to contend with that VWAP area as well. That's simply right around that 65 area. So getting clearing up through 60 65s, right? If you're on typically on a bullish lean type of play, that's what we're looking for here. On the flip side, if it kind of gets back down below 55s, right? So we're kind of in a a little mini consolidation area, trying to resolve this area one way or the other. So we had buyers that came in that kind of pushed this leg up. Sellers have coming out. So it's just somewhat two-sided trade. I mean, so kind of a more of a neutral. But if you're kind of laying out like, if you generally lean to the long side in most of your trades, not everybody is equally proficient at trading both sides, long, short, and being able to flip from a long to a short, back to a long, back and forth, is not as easy as it sounds, because each of us, kind of has a tendency that I'm a better long trader, I'm a better short trader type of thing, right? Or I have better successes on one side versus the other. So if that being the case, then as you're monitoring the markets, you're waiting for, like I said, if you're more of a long bias trader, successful, trades there, then you're just sitting and waiting. But you're in terms of sitting and waiting, that doesn't mean we sit here and not do anything. What we're always trying to do is map out, frame out what areas would need to, see price lift above and then hold to then, shift the odds of that extended moves may unfold, beyond that. Right. But and then vice versa, if you're better to the short side, know what you want to identify there as well. Right. And then of course, if neither of those signals are presenting themselves, then what we call you're sitting on your hands until it happens. So, but in the meantime, our little auto execution algorithm here kind of does click off some trades. So my discussion is more geared to if you're more of a discretionary trader for yourself, just know what conditions you're better to trade in. Right. Our discussion here typically kind of is more generic, like looking for this to happen on this side, looking for that to happen on this other side. Um, and then ultimately, when that particular, you know, pattern unfolds, then each individual has to, obviously take the trades for themselves. But we're trying to frame it out, trying to keep everybody focused on, you know, what the action is and where the potential opportunity is on whatever next phase. So right now for us, we're small long on an A4 trade to the top, and so that's first target has been taken out already, so that kind of auto trades itself there. But if you're discretionary, just kind of sit tight and play your game. I think today, like I said, is going to be more of a quiet event in the morning session here, but anything can happen. So, and that's kind of
Yeah, I
where we
think that
are.
that's an important part, an important point that David points out. Know what kind of trader you are. Know what you guys hear me talk about that a lot. Double down on the things that you're good at, right? If you see over time that you're better at trading alongside, then double down on that, right? I know I did that. I figured out that I was losing so much money trying to short the market, and even in down tapes, I was still making money on the long side, right? And that's when I that's and it was over some time that shift happened. But then when I finally committed to having I'm not old. Yeah, of course I take short trades when they set up, but I'm less interested in them because I know that it's going to be a struggle for me. It's not going to I just have a better day when I'm on the other side of it. So I stick with that. Pretty straightforward. All right, so guys, here you can see that trend line I just drew out. We're bumping our head up against it. And the reason why I'm pointing that out was kind of like what we went over in the pre-market prep, right? Let's see if we can get above that, right? And maybe if we're going to get back into range, which it looks like what we're doing, right? Because we were rejected down here from lower prices, right? And now, if we can get back above, then pull back to this trend line, maybe for a launch higher, we'll see. But first, we have to get above it. We have to close above it, and then I'd like to see more than one close above it, and then gauge any pullback there for an entry. Um, what one thing that David pointed out, which I think is really important, is that they're sitting on their hands right now and they're waiting. And that's it. When I became comfortable with not doing anything, I mean, it was a monumental shift. So two things happened. One, I started spending a lot more time on YouTube. Two was that I started to realize that I didn't need to trade that much to knock it out of the park. And yeah, that's what happened to me.
Yeah, sitting on your hands is probably for most traders, I would say they're A personalities types, and sitting on your hands is probably the most difficult thing to do in trading. Sitting and being patient, you know. And I would imagine, I mean, my wife tells me this all the time. She walks by the office and I'm sitting there and my leg, I don't know about anybody else, but my leg is going a mile a minute. It's like I'm
That never
practicing
happens to me.
yeah, it's like I'm practicing my my uh my kick drum. Okay, pop, 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 right? And she says it shakes the floor.
Hmm.
So how
Yeah.
many people, you're sitting at your screens there now? I don't know. I don't have a stand-up screen, although I can stand up and see my screens. But when I'm sitting down, my leg is like going a mile a minute, and because it's that pent up, you want to get in there, and you have to pay attention, and it's difficult because paying it having it acute focus for, I don't know, more than 20 or 30 minutes. I mean, it's tiring without doing anything, like having a trade and then managing it, and the market's moving. When the market's just kind of grinding, right, you're ready to go, and it's just one of the most difficult things that I know I've found. Well, years ago when I was market maker, I mean, that was never a problem because we're always trading one, I mean, it was not, nonstop constant trades because different stocks doing different things, it was really kind of a multitask approach to a lot of things. So a lot of things were going on. So it's never an issue. But when you're trading one instrument and you're, I mean, you could be in a long here. We talked about, being in a long here. So you could be in a long and then say, okay, good, I'm managing it. And there's not much a whole, how much more to do once you're in that trade, you know. Uh, and we did get our shift we were talking about earlier, right? Getting above, this level here, and then rotating down, and then working our way, up. So if you're, like I said, if you're a long bias trader, this is the kind of the formation that we're looking for, right? To take some sort of action. So again, it's the idea of knowing what trades to be looking for, trade your plan accordingly, and you know and staying with it. Over here on our side, top left, the A4 is a long. We just triggered on a short. We've been looking for near. Well, we actually haven't triggered yet here, but we're at that level on the A10. So that's up by the VWAP zone, and so we'll see if that can play out. If you're on the long, you're managing the long. You're not worried about a short. You're worried about managing along and just scaling and trailing type of thing. Um, if you're looking for the short, you're just looking for a reaction off of this level. So
Yep. And guys, I am similar to David. I just took the break though of that high. Looking at for a quick scalp here. Let me just get it up. I'm just, it's kind of hard because I'm not, I can't show my, can't do that. I don't want to, it goes against the rules, but let's see. Yep. Okay. So I took the long trade there on the break of that trend line that I was pointed out. The same thing I highlighted for you guys. Break above, we got the close right here, right? So that bar closed at 62. I got long right on the open of this bar, 62.50. I did not add to it. I'm just going to manage what I have. I'm looking for I got a 3-point scale out of it. Again, like I said, just a scalp. Not expecting blue sky territories. Not expecting new highs. I'm not expecting to pay tuition with this. It's really hard to, kind of, and I don't know what the right way is. A lot of this, I'm trying to find my way. Like, I really want to. Obviously, transparency is everything, right? And I want to be as transparent as possible, but I also have been told not. There's certain rules I can't break. Um, but my trades are all posted. You guys know what I'm doing. And I think it's important that you guys know that I'm trading exactly what I'm telling you about. Like, why would I come out here and talk about, some stuff that I'm not doing, that I'm not executing on? Like, I wouldn't I would not waste my time. Not. I'd be like lying to myself, right? Just make sure that this A4 isn't aligned. Yep, I'm showing the wrong account number there. Got to change that. Why do I have the same trade up on every screen? Doesn't make any sense. I think 603 is the one that this one's pegged to.
Manny, you're talking about transparency and everything, and showing trades and so forth. And though that's certainly important. But the kind of for those out there that are looking for guidance, all right, that's really what the core of what we're providing. Kind of being able to sit, you know, at the table with uh, folks that have, traders that have experience, and kind of to try to read the market how they're reading it. Particularly if you're relatively inexperienced. Um, Being able to, having somebody just kind of give you trades, or you're copying somebody else's trades. In the very, very short term, that may work for most, right? So okay, I'll just copy his trades. Okay, David took a long here, took a short there. Okay, now what happens is, well, I got one long and I got one short here, right? Now it's going to confuse the hell out of somebody. Wait a minute, he's long and short. What's going on?
Yeah.
Two
Yeah.
separate accounts. What should I do? That's where the confusion will come in, because they'll see it's like, well, he's long, he's short. What trade should I be taking? Again, that what it comes down to is, well, maybe you want to learn what their methodology is. You know, so if somebody's just out there just wanting to scour the various YouTubes and internet world and so forth for people that are just giving trades out, trade callers. The issue there is, for me anyways, is people don't learn anything. That just and again, when they're left on their own, they're not going to be able to survive in an environment where you need to build certain skills and levels of competencies in order to survive. And just being able to, let's put it this way: in caveman days, here's an analogy. In caveman days, right, you had to go out and what they say, eat what you kill, right? Well, in order to do that in a very dangerous environment, you have to build certain skill sets. You have to learn how to hunt, right? And what the most effective ways of hunting. Otherwise, you're going to be the hunted, and you're going to get eaten alive, right? So the idea, so the youngsters, learn from the elders, but they have to build those skill sets. But if the youngsters, just depended upon the elders to go hunt for the food and then come back, and then they eat the spoils, right? Eat the food from the what the elders, hunted for. They're not building any skill sets. So what happens if something happens to the elders? They get eaten, unfortunately, right? And then the youngster is left to survive the tribe. Guess what's going to happen? The tribe's going to die, because that youngster has never built any skill sets, right, in order to survive. Well, in that analogy, maybe a crude analogy, but it's the same here in trading. If you're just going to a place and wanting somebody to give you trades so you can make some profit or pass a prop challenge or something, okay, yeah, in the very short term, yeah, you'll eat a little bit, right? But if you don't build those skill sets, uh, in the longer run, you're gonna one that's gonna get eaten alive. So
Good.
learn from others, and and the idea is maybe learn somebody else's methodology, through an educational process. But so anyway, that's kind of my little missive there about transparency. Yes, we're transparent. We will always be. And yes, if you want to shadow trade, we can't stop you. There's no, I'm not, there's no law against it or anything. But I always caution everybody, because yeah, in the short term it'll be fine, but what you really want to do is build a skill set and learn how to read the markets effectively. So, but everybody's different. So take it for what value there is there for you, and not.
Yep. Good point, David. Good point. I mean, look, live transparency is you're going to see the good, the bad, and the ugly, right? Um, no hindsight, no cherry picking charts after the fact. So with that, understand that, like, to David's point about learning a methodology, what you don't want to do. I mean, because here we're not here calling perfect trades, right? It doesn't exist, right? We're not trying to hide anything, or say, hey, I have 100% win rate, like some people claim they have. Um, but what we're showing you is how decisions are actually made in the moment, right? Like the logic chain that I followed on this long trade was laid out for you guys pre-market. I laid it out for you guys exactly how I was going to approach it. And the best thing I can do is share that with you guys. But what I hope that you learn is, and what I think that'll have you coming back day after day, is the logic chain, right? Once you learn how to think in this, like think in alignment with the dominant forces. Think about, how do I stay on the right side of the trade so that I'm not fighting the market, and those make for long days. And what you're going to see, if you tune in consistently, sometimes the read is clean, sometimes it's not, and that's trading. And I'm not here to hide that. You like I said, the good, the bad, and the ugly. You'll see what trades we take, but more importantly, I think you're going to see the process that goes behind those trades, the thinking, and hopefully, that rubs off on you, and hopefully that's why you're going to come back and watch us day after day. I think what's more important though. What I think is important is the trades that we pass on, right? Because I mean, anybody could sit here and trade 1 minute chart and take every oscillation, right? That's a long day, guys, and that's a low probability process. The goal here is not to flex P&L. It's to show process, to show discipline, and to show execution under pressure. um, uh, yeah, I mean, whatever. That's my take on it. David's been doing this live trading in his community for as long as I can remember. Years. Just to add some context to that. And one thing that, when we were just kind of discussing going live, to bring what we were doing day in and day out, I've been trading alongside David for over 5 years. And when we were discussing, hey, should we, because we knew we had quality to offer traders, and we were just doing it on our own private community, and we would start discussing what would be the advantages and disadvantages to going on a more public forum, and the advantages outweighed the disadvantages. And so one thing that David told me was, hey, you know what, you're giving live market reads. Hang on a second. Hang on, let me just answer this question here. Bear with me. Yeah, so sorry about that, guys. So when we were discussing going live, and I was discussing with David, and he said, if you're willing to sit there and give your live feed, give your live reads, and you have to be able to do it like nobody's looking. And I didn't really, to be honest with you guys, I didn't really give a shit, like, because you're gonna get trolls, you're gonna get people that like it, people that don't like it. But if I remember when I was really struggling bad, and I thought, if I could help somebody out there once I get consistent, I'm definitely gonna do it, because I remember how bad it was. And once I hit that point, we decided to go more public with it. And anyone can post a winning trade after the fact, but not many people are willing to call out their process and execute that trade live. Very few people can do that. I mean, more and more, I think that that's where we can add value is in that whole process. Yeah, I don't think people will. I think that if I traded live and I had 100% win rate, I don't think that people would be interested in that for very long. Um, because something would be wrong with it, and what would you learn? Plus, if I had a 100% win rate, I wouldn't. I don't know that anybody could learn anything from that. So, end of the day, we're not trying to predict every move. We're trying to stay aligned, manage the risk, and execute when it matters. I mean, I think that's it. So, following through on this trade here, I got the two scales, 3 and 5 points. Now I'm looking for a 10-point scale at 71, 73 quarter. Pretty straightforward process there. Let me know if you guys have any questions. For you guys, folks watching on YouTube, please hit that like button, hit the subscribe button, come back and check us out tomorrow. Also, we have the 12 o'clock FOMC event going on today. Come check it out. We have a ton of speakers. I think we have like 8 speakers, all with different narratives, all with different perspectives. You're going to want to check that out. Shoot, I need to blow my nose again. Hang tight, guys. I'll leave you with David here. Just give me a second. Let me see what was that. All right. So Stu asked, could one or both of you discuss what are the differences to be considered in trading options and SPY versus many SPXs, XSPs? Do you mean like the ES Mini, Stu? Hang tight. Let me just blow my nose real quick.
All right. When Manny stepped away there, everyone, for a moment. Again, what's happening on our side is we had an 8-10 short play. Just a quick review there. and that did get stopped out. Okay, but we're still lugging along from the A4, so that's working. We had 3 scale outs there, and now we have a trail and scale situation there. So it appears we're getting some sort of a grinding move. Again, we talked about uh, the early down lean. Just a quick review, right? We had talked about the early down lean, and if you were looking for the buy side, okay, if you were a better buy side trader than a short side trader, again, we outlined that you'd be looking for a shift back above 60, 65. So we ended up getting this move here. Okay, our structural lines here also shifted. Color background on our charts also dictate the developing directional influence. And as you can see, what the result of that outline back to the buy side lean, how that unfolded. For us, the way we structure it, typically unfolds in stages. So it's not an event, but it's rather an unfolding. All right. And as you can see, we're certainly off the buy side here. Once it shifts here, this is what we're looking for. Once it shifts, direction, all right, we don't play around with, oh, I want to short them higher now to try to get a better price. We respect the shift. We go with the shift. And if you fail to respect the shift, then the market's going to hand it to you. But if you stay with the shift, if you respect that, you'll be a much happier trader. Manny, you may want to respond to Stu's question about those options. I'm not qualified enough, so sorry, Stu. Maybe Manny can give you some further insight. I think he's a little bit more versed in the options than I am, so I'll pass that along to about that.
Yeah. Stu says, can one of both of you discuss what are the differences to be considered in trading options in SPY versus mini SPXs, XSPs? So, Stu, are you asking? I believe the XSPs is like it's a derivative of SPY. It's like the smaller, like a SPY mini, where they're the ES full contract, they're like the ES mini, and then we have the ES micro. I believe XSP is a micro version of the SPY, right? And so, and then if I'm in, let me just check. Right. Okay. Boom. I was right. Okay. So, all right. So, all right. Got the 10-point scale right there. Really happy about that. All right. So back to Stu's question. So here's my take on that, Stu. So SPY, it trades more like a stock, versus options are going to be, gosh, I can only speak from my experience, right? But options trade differently. They don't move like an ETF, and just like an ETF doesn't move like a futures contract. And the important part to know there is that on options, you have to be right twice. So you have to be right on direction, but you also have to be right on time. You'll hear from options traders all the time, right? How they nail the move, but didn't get paid on the option because the time worked against them. All right. And so if you have a fixed target on your play, like say you're doing a play into earnings or something of that nature, where you have an end date, then I think it makes sense. But I could never come to terms with me being right in an options play, but being, having the wrong option, not buying enough time, and then losing money on the trade. So like I'll play. I do put on options trades when I know what the time frame is. Like, all right, I'll know if I'm right. Like, if this earnings move happens, earnings are coming out on Friday. Today's Wednesday. I know that I'm either right or wrong by Friday. Then I'll put on the trade. But other than that, I prefer to stick with just having to be right once, right? So just having to be right about the direction. I think that's hard enough. So that's my take on it. I hope that helps you out. Yeah. So JB points out there, the XSPs are cash settles. With SPY, you can get assigned the shares, right? So if your option expires, you can be assigned those shares. Nice move there. Nice move. I got that 73 target. Pretty happy about that. What time is it? 10:45. I wouldn't be surprised if this thing slows down soon. Not at all. Hang tight, guys. All right, so we went up to 71.75 quarter, and then we retraced. Did David leave again?
Yeah, I stepped out just for a moment.
Okay, I
Danny,
wasn't sure.
I'm back with you. Sorry about that. Did I miss something? I probably missed your whole missive on the options.
Well, I gave him what I had, which wasn't much.
Give him
um,
what you had.
yeah, that's it. Sorry about that, bud. Uh, but yeah, so I was just telling the folks, I think that I wouldn't be surprised if this thing starts to slow down here. We'll see. We'll see.
Yeah, the only
It's
thing
just,
I was saying, I guess while I was away, I had the mic off, is in our side here. All we're doing is just on the A4 on the top left. It's just a scale and trail right now. We're just waiting. We'll continue to trail that up until that A4 line shifts. If it shifts bearish, right? If that breaks, that's a structure line. So if that structure line breaks, it's an automatic exit on the scale on the trailer. So all done automatically. Uh, and again, even it doesn't have to be done automatically, but it is done automatically here on our side. But if it's not done automatically, again, the idea is knowing what rules you set forth in your own trading, how to scale. If you have a good trade going, how do I scale it? How do I stay in it? Do you have a rule for that? You know, the old adage, there's an app for that, right? Well, do you have a rule for that? Do you have a plan for that? These things I was taught when I was, you know, back in the day when I was younger. Like, my early mentors always said, well, do you have a plan for that? It really would all come down, do you have a plan for that? And so, most people, I don't know if most people, but there are people that trade without really a plan. They just kind of wingding it, right? Not usually the most successful traders out there, but those that are successful definitely have a plan of action. And, you know, so
Yeah,
anyways, yeah.
even a shitty plan beats no plan.
Well, a crappy plan, yeah, a crappy plan can be revised and improved upon. But if you don't have a plan and you're just coming in and just, just wing, I call it wing dinging it. With you just wing dinging it, again, you're not going to have a longevity.
Hey, you trademark that, David? Wing dinging.
I should trademark that wing ding.
Yeah, there you
Yeah,
go. Yeah.
the wing ding trades. I think I have a meme for that somewhere. I'll have AI, my assistant Allie. Right. I'll have her create a wing ding meme just as a reminder. No wing dinging. So yeah, no, I think it's going to be a grinder from this point on. The exploration down to the low end of the range, and then shifting back up. So they explored the downside, cleaned up the sellers, kind of shifted back up to the upside. But I think it's going to be a grinder now. Um, and there's typically kind of an upward lean historically into the Fed anyways. So we're in that rhythm right now. So right.
Yeah, I think that yeah, I couldn't agree with you more. I think that we're probably in for some sideways action here. We'll see. We'll see what pans out. But
Reb's talking a
I
little bit
hope.
about some oil stuff here. I don't know if Reb wants to come on
Let me
and
see. Reverie says post from the other room that might be helpful here. The crude draws we've been talking about since this started. Let me just expand this here. Uh, the crude draws we've been yakking about since this started here. EIA crude inventory report was bullish as all get out. It's not going to get better until months after the Iran situation evolves. In short, I mean a bunch of other stuff. In short, those are effing huge supply draws. Which you know what, we should just bring Rev on because that is like I might as well be reading Swahili. It just uh let us know when you have time to jump on, Rev, or if you want to cover that in our later FOMC. Sure, yeah, come on in, join the show. Happy to have you. There he is. Let's make sure that we get Rev in here.
Reb's with us in the room.
Okie dokie. Let me dial back here and then
Reverie is
get a crude
our
chart up.
resident crude oil expert. Yes, I can. I can hear you fine. Yeah.
Let me see. Got you, Rev. Now I got you. Yeah. Hey, how are you? I'm okay. I'm doing good. Thanks for. All right. So, Rev. So Rev is our resident crude guy, right? Crude guy. That sounds weird. Um, and so he always, always has light to share in terms of all things crude, and which is even more relevant now with this Iran conflict that's been going on. So we one of the things that he's been kind of alerting us to was these crude inventory coming out. And correct me if I'm wrong, Rev, but I think that that's probably in crude in the crude orbit. That's probably as important as earnings and indexes, or maybe even like a CPI news. Right. So no, and so really quickly, just, for the folks watching, let me, and that may not know what Rev's talking about, right? So, in crude inventory, and Rev, step in here if I get this wrong because I'm probably going to butcher some part of it. So, an inventory draw is if crude inventory oil, like how much they've already pumped out, goes down, that's a draw. And then if how much they have in storage ready to ship out goes up, then that's a build. Okay. And so draw equals demand, right? And then, supply it's the okay, so yeah, so that's the nuance, right? The nuance is in the draw and build imbalance, correct? Okay. Yeah, so Stu asked in the chart. So Rev, you're saying that this will begin the serious move up in oil to and continue. Correct. Okay, good, good. Thanks, Rev. And so is it one of those things where like, you got a big build and we don't sell off, then that's information, or big draw and price doesn't move, there's is it something like that? Right. Okay. And so what do you think about this 105 level that I have my eyes on? I mean, I know you're looking for higher prices ultimately, but do you think that that can yield a trade? What are your thoughts? Right, 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 right. Okay. Sweet. Right. Right. Yeah, and I think that crude is a great intraday scalping. What I consider a scalping crude. I mean, 50 cents is equivalent, like in terms of points, like to 5 ES points, if I'm correct, right? So it's like, right, right, right. So it moves a lot like ES's increments. And so let's just talk about that here for a moment, guys. Here's how I would how I would treat that setup, right? So I have this level here, this 105 level. And obviously, this is I don't know why I'm looking at a 30-minute, but I like the 15. So look at a 5-day 15, right? And you can see why I'm looking at that level right here, right? This was our prior high right here. There's also some flows information tagged to that, to the 105 options level, the call wall. So I'm looking at this level. What I would want to see first is something like this, right? Where we come up. Thus far, we only have one red print. So, right, nothing materialized yet. But if we can come down, right, and then get below this area here, start working into these wicks, then I can look for a pullback to short up against this high right here. And yeah, you see the divergence right here, right? Yeah, it's pretty weird how that news came through and didn't. I mean, I think there was an initial like spike up or spike down, and it quickly shrugged it off, which I thought was right, 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 right. Yeah. So that's yeah, that's I can remember trading crude years ago, and it I remember it moved really well, but I just didn't understand it. So it's always fun to have you come on and kind of share your thoughts on it. Let us know if you have any questions, guys, especially you guys watching on YouTube. You don't have volume. Oh, oh shit. No, you don't. Just kidding.
That's just me being Canadian and polite, I guess. Yeah, for sure. The time frame is everything with crude, right? Because you can, like, the moves are so big and so whippy and snappy that you can be bullish crude on the thesis that we've been talking about a lot lately, including here now with you, Manny. But but it could be just really negative day. You know, I was jumping all over the board saying Santa Claus has arrived, you know, 105 going away a week and change later. I mean, so so you have to be careful with when you're listening to either God and you know and other people, because they may be simply trading a different time frame. It may be a whole other story.
Right. Yeah, you know, like what David just posted in the chat. Exactly, Rev. Simply stay aligned with your time frame that you're trading.
Yeah, he's right on the money with that.
Yep.
Anything else anybody wants before I hop
Yeah,
on?
so Stu just asked, Rev, could you go over again your suggestions for trading oil with options? I did not fully understand, so I have been using DNO, for which you said did not give the same profit percentages. Not sure if you can answer that for us.
I think what you're asking, Stu, is like I vaguely recall, you know, what I was referring to is that for the longer time frames, I find options are a smarter way to go, just because the cost of like you're really making an all or nothing trade, right? Like if oil's at $54 and you're betting on it to go to 200, say, you know, or even $100 in December seemed like, you know, like the moon. But now you're looking pretty smart. So if you were going to make that trade, you didn't need to buy NYMEX contracts and roll them and roll them and roll them, and you know just buy, you know, June or July $100 crude calls for, they would have been pennies back then, right? So if you're going to trade the longer time frames, options work better because you have less capital tied up. You don't have to worry about a tweet today and a tweet tomorrow, and oil goes up $5 and down $5, and you know, and you end up with a hairdo like mine. So you know, so so that's how you know that's a good place to use options if you're making an all or nothing bet on an intraday move. You know, trading the actual contracts or trading the ETFs works well as well, because they trade pretty technically as well. Just keep in mind that the ETFs are much better served for intraday or a few days maybe. And you have to be very careful of them around options roll, because sometimes they roll at a different, like they roll based on when the volume is higher, not when the contract actually expires. So it gets a little wonky around options expiry. And I think the other thing you were talking about that you might be referring to is a call spread that I referred to. So you know, you can buy $200 calls, say, and sell $250 calls. You know, so you can, and there's lots of different ways to do it. And I don't want to get into it here because it'll just take too long, and I don't want to hog up all of Manny's airtime. But you know, there's lots of different ways you can use call spreads or put spreads. I recommend being very careful with some of that, because that's what I used to do years ago before I actually, you know, decided I wanted to make a living at this and not just, you know, show off for my buddies with the occasional grand slam home run, but striking out all the time, you know, quietly and not telling everybody about those. Is if you do these, what I call Cirque du Soleil trades, where they're, you know, where they're so complicated, you can't answer the simple question of whether you're net long or short. It's probably, you know, out of your, it's way better to just trade what you know, with a size that you can handle and build that up slowly, because you're going to have to go through that process one way or the other. I know David Manny talk about that all the time. And it's way better to do that at the beginning rather than later. I will say this market for sure for crude, without any question, is not an on-job training that we talk about here. Is fairly sophisticated stuff to try and outsmart. It's way better to shrink your time and trade intraday using technical levels than it is to try and outsmart all these different governments and militaries and, you know, all the rest of it. I mean, even the smartest people can't do that. So use that. You know, one of the guys, I think it was JB, maybe, it said, you know, I just trade the tools I have, and I thought that's exactly right. that's enough.
Good stuff.
Just because you don't know everything doesn't mean you need to know just because you don't know everything to just, simple tools and simple trades and simple ideas are enough. Like the market's juicy enough. You don't have to bottom tick and top tick every single thing at triple the size. I mean, there's a lot of meat in the middle with how big the swings are here.
Yeah, that's a great point.
You're welcome, Stu. No problem.
Yeah, all right, guys. So I think that's going to wrap it up for us for today. Rev, thanks for coming on. Thanks for joining us. Always appreciate your input. I know you have to get ready also because you're going to join us at 12 noon. And that's why I'm cutting it a little bit short here, guys, because I want to I had a workout this morning and I didn't get anything. I haven't eaten anything. I just got long 71.56. It's a pre-planned level that I had on my setups that this is not an algo trade. It's part of one of the setups I put out this morning. So if I'm